All right. Can you guys hear me now? I think maybe you guys can hear me now. Sorry about that. Just like I said, this is what I was trying to say here was I've got a new I'm trying out this new streaming service. So we're going to see if it works. All right, good. You can see me. Okay, good. Or you can hear me. All right. Yeah, so hey everybody. Welcome in. Like I said, we are working on a new system here. And so we're going to try this. I've got Fiboswanny joining me in today, guys. Okay. As always, you can join us here at howtotradetowin.com/LMT for our mentor program. Welcome to Roderick. He's our newest mentee joining in with us just today. We're really excited about that. Let me see here. So I'm coming at you live, guys, a little bit after 11 a.m. Central Standard Time here on Friday, February 24, 2023. In case you didn't know, my name is Christopher Inks, and I am with Texas West Capital. And like I said, today we're going to have, I think many of you all know who he is, Fiboswanny. He'll be on here, and we'll talk some charts. Okay. Let me see here. Who's already here already? We've got, let's see, Bamboo, Black Horse, David, Bastian. Who else do we got here? I hope I'm not screwing up anybody's name. Try real hard here. Melissa's here. Is that, oh man, I'm not even sure how to pronounce your first name. Your last name is Oskolas. Good to have you in. I don't want to really screw it up too bad. Carl, what's going on, man? Good to see you. Wazobia Dollars is here. Brian Riley is here. Jared Hammond, Data, Aardvark, Higher Lower Crypto. Good to see you guys. Diego, Pete. All right. So real quick here, like I said, you can join us here, howtotradetowin.com/LMT up there at the top, right? You know, again, that's our mentor program. It's a year long. You can go to that page there and tell you everything that's on it. Amazing thing you guys can really kind of get into there. What do we have today? We had the PCE came out today, right? I am butchering names. I'm not trying to. I'll tell you that I'm not trying to. But yeah, so we had the PCE came out today, guys. That is the Fed's preferred inflation gauge. I know everybody makes a big deal about CPI, but actually PCE-PI is the name, is the real one there, because not only does it have to do with, you know, with your inflation as far as prices go rising, right? But it also is adjusted based on how your purchasing changes, you know? So basically, as things become more expensive, you usually change from the more expensive or the name brand to the non-name brand kind of things, right? The more generic things. And so that kind of captures all that in there to help get a better idea of how that is. All right. So that came out this morning. It came in a bit hot there, right? So if we're looking over here, it came in, let's see here, just slightly higher than last month. It was the first rise, I believe it's year over year in like 7 months. So not necessarily a terrible thing. I know everybody kind of jumps on it right now because we've had 7 months of this great decline, you know, in inflation. And, you know, this is the first month again where it's kind of came up, and it came up just like a tick, right? So it was, let's see here. What did it come in at? Let's see here. Let's see here. So CPI, of course, earlier, you know, the last time there for January came in at 6.4, down from 6.5 in December, but, you know, estimates were going to be 6.2. So it came in higher than estimates, but still was in a downtrend, right? But if we look here, oh gosh, where is it? Did I miss it already? It's on here somewhere. We came in like, oh, here we go. We had a 5% increase in PCE for December, and that was down from 5.5% in November. So big drop from November to December. Estimates were 5.5. And of course, you know, it was, again, big drop down, right? Core PCE was up 4.4%, which was, you know, what they expected to get there, right? But anyway, so yeah, so we came in just slightly higher this time around. And so that's got people, you know, really worried about the stickiness of everything's going on there, right? Of inflation and whatnot. And I mean, you know, at the end of the day, guys, the news and everything's making a big deal of this. Okay, Fed said 5%, and now it may be 5.25 or 5.5% that they target, right? I mean, in the grand scheme of things, that's nothing, right? Most of the work's already been done. We're sitting here at, we look right over here, right? We're sitting here at 4.5 to 4.75, right? So coming up, this next rate hike in March, right? The market's pricing in a 67% chance of a quarter of 25 basis points and a 33% chance of 50 basis points as far as rate hike goes for next month. So, in the grand scheme of things, it's not really a big deal, but the news is going to make it out to be a huge deal, right? I think if they do happen to go 50, I think that's going to be too much. And then you're going to see a snapback on everything after that. And so everybody's going to get really bearish all of a sudden. And then everything will show, okay, well, we shouldn't have been. It was like this, we've had this big downtrend. And then we had this little bip that came up. And then, the Fed jumps out and goes, oh my gosh, we need to jump off 50, right? And then that ends up being too much because it's already too much as it is. And then it pops back down. So I don't think it's really a whole lot to work for. I think it maybe gives you a little bit of volatility in the meantime, but I don't think there's any real chance of things changing around there. So I wouldn't be too worried about it overall, guys, okay? Let me see here. Excuse me. Let me get up Fiboswanny on here, joining in. All right, man. Good to see you. Let me see if we can hear you. Go ahead and speak up, man.
Hello. Can you hear me?
I could hear him. Could you all hear him? All right, man. Hey, listen. So, we're kind of looking at what happened there with PCE coming in, just a little bit hot, right? It came a little bit higher. But at the end of the day, it seems like Bitcoin was up there already kind of at that point where it was going to do some pullback anyway. DXY is just kind of really, it's just around that weekly pivot area now. So what do you think's going on, man?
Actually, I think with you showing the CME, the projections for the next couple of times, the Fed tool is what I'm talking about. When you look at that over the next couple of times, I don't see much different than what people are expecting. So right now, I think it's kind of a nothing burger, but the market is reacting a little bit off of it, but not enough to really change overall indications, at least on my end, from what I'm looking at.
Yeah. Let me pull up a chart here real quick. Again, new system here, trying to get all this figured out. Okay. So I've got the DXY over here. And so I've let me put this. So this is actually the futures chart here for the dollar on the ICE exchange. And so I've got this orange range here, which is what I was kind of looking at as far as targeting goes. If we look here, that weekly pivot is, as you can see, right in this area. We're still within this large wick here, which was this big rejection before heading down a bit. So, for me, if I look at this, it looks like, if I'm counting waves here, it looks like we've potentially got one down and we're working on two up. And two, usually the first target we look for is around wave 4, the lesser degree. So, it kind of fits in here with the high volume nodes, just kind of maybe a peak above the weekly pivot and pull back. But what are you kind of looking at as far as the dollar goes?
What level is your pivot at? What price level is that?
Are you talking about for the weekly?
Or yeah, the chart you had up there.
Yeah, that's 104.20, 0.205, right around that.
Oh, okay, cool.
That's it.
Actually, on my deal, I've been in the bull zone for a little bit on my stuff. I can show my chart real quick if you want me to.
Yeah, go ahead, man. Go and pull up your chart.
Let me see if I know how to do that. Let me see here. Let me, like you said, new system. Let's make sure this works.
Yeah. First time I've ever had a guest on, so I'm sure I'm going to stumble the heck through this.
All right. Are you seeing a chart now or no?
All right, there you go. Yeah, we've got you up there.
Yeah. No, I got the dollar on here. For the people that know me, I look at the RSI, the ADX, and Fibs, of course. But what happened here was on the RSI, we went into the bull zone, and these ranges are built based on historical analysis that I do based on a lot of different things, but we don't have to go into that at the moment. But it went into the bull zone here, and this vertical line is where I go to set my threshold, is what I call it. And this is where, to me, I'm measuring that psychology in the market. So I'm trying to find that spot, what I call liminal space, or that threshold that people want to jump from one spot to another, where emotions run the highest and all that kind of stuff. And I'm trying to measure where that actual psychology change is. And when I look at this on the bull zone, it went into the bull zone right here. So I start my fib at that level, which wouldn't be a normal spot that people would normally kind of see where you'd want to start your fib at. But that's where my Fibonacci starts. And then what I'm doing is I look at the fib levels, and I have a shallow fib as my buy areas. And I went, and the long 10% is just based on my risk management stuff. But this is where I went long when we went into that bull zone. And I have a target, which actually on a previous bear zone back here, the start of that zone is actually at the previous high. So my 100% level that I have here is where actually my next target is on the long of this, on the long for the dollar at the moment. So I'm still a little bit more structurally bullish on the 4 hour here. So you got a little bit more upside possibility to that target. And then that would be where my sell would be, and then work from there. So if this actually dipped down to the shallow fib, I'd actually buy more and keep working on that target to the upside. So right now I'm leaning a little bit more, possibly a bullish correction in an overall bearish market when you look at the different time frames. But in the near term, I'm a little bit bullish. But longer term, when you jump out, like what you're showing on your pivot on the longer term time frame, I have the same kind of look there, to where it, longer term is still in that bearish structure.
Okay, yeah. So that looks like your target there looks like the that wick I was talking about on the weekly. It looks like
and that's why I was asking what level your pivot was. I wanted to see how close that pivot was to that previous high.
Yeah. Okay. Yeah. So basically, you're looking for maybe a little bit more strength in the dollar, and then ultimately just to have it kind of reverse and fall back on down, print lower lows.
Yeah. Correct.
Okay. All right.
Yep.
Yeah. I mean, I go ahead. I'm sorry.
No, that's it. No.
Yeah. I mean, I like that again. If we're looking at what I've got here, again, I think that target level is this same wick here. What I've got potentially is a wave 4, right there. And so that looks like that's your target. And then I don't know, when I look at this, basically what I'm looking for, we've got this little peak out above the weekly pivot. And so I'm looking for a rejection in this area to send it back down below the pivot. And I think if we lose that pivot, then really that's kind of saying, okay, that's done and we're heading lower. Again, for me, looking a little bit further out, if we've got this here as a 1 and a 2, and let's say we get kind of this rejection right there where you're looking at, again, that gets us getting on down here, into the, wave 3 is down here around 82.83, which is a pretty big move down, or, could potentially be ABC here. But I don't know, for me, I tend to think the dollar looks pretty topped out right around there.
Yeah. When I jump into my daily, I look at the 106.89 level is kind of my level in the sand, to give us, kind of a top. But let me show you something real quick. I just jumped out to another time frame.
On that same chart?
Yeah. And
Whoops.
Whoop, hit the wrong button.
I lost your chart there.
I'll get it back.
Are we having fun, people? Look at this. I'm just messing stuff up left and right here. We'll get used to this, guys.
Hey, first time for everything, right?
That's right. That's right.
I jumped out to I jumped out to the daily, and what I'm looking at here, I had this bearish threshold here. As you can see, it's all in the bear zone down here, and then it went into the bull zone here. So on the 4 hour, I'm bullish. On the daily, I'm actually a little bit on the bullish side. But the interesting thing that I have, one of my guidelines, or actually one of my rules in setting the new bull zone, is you have to have 3 consecutive settles above the previous shallow fib for my previous bearish zone. And as you can see, we don't have 3 consecutive settles yet. So I'm not technically bullish on the daily just yet. But if we do get 3 consecutive daily candles above this 104.57, then that'll change my structure a little bit on what I'm looking at. But right now, with the 4-hour coming up towards some of the resistance levels, this hasn't really ticked in bullish just yet, coming in close to some of these resistance points. Selling interest should be a little heavier as we get up into these levels and continue that downside. Now, if we get a couple more days above here, then that might be a little different story. Might push into the 109, 110 level. But right now, I don't have that signal, so I'm not jumping on anything just yet on the daily.
Okay, so your thought then, risk assets then relative to what you're thinking about on dollar, what are you thinking?
No, I think if it tops out here on the dollar and starts selling off, those will move into those riskier assets like Bitcoin and gold and maybe some other things. But right now, I think we're kind of in that limbo land between timeframes for me. And this is that liminal space that I talk about a lot on the psychology side of things. We're in between. It's a little bit bullish here in the near term, but longer term, it's still bearish. So you get in this little bit of a zone and people start to freak out, like, I don't know what to do, and that kind of thing. So you get the emotions start riding and you're like, oh my gosh, it's going up. I got to get in. And right now the daily's really not giving me that signal. So my emotions are going to be like, all right, suppress them a little bit. You don't have to get all too excited. But if the daily does click into that, then my system tells me to go. And then that way I don't have to worry about getting in or not. But right now I'm staying structurally bullish in the near term, but overall the primary trend still remains to the bears at the moment on the longer term time frame. So I kind of stick with that. And as long as that holds, then I think we ease lower on the dollar and start gaining on some of those riskier assets.
Okay. Yeah. What I'm kind of thinking, same thing. The other thing I'm looking at here, your weekly Stochh RSI. RSI never actually reset into oversold, which makes me think we've still got lower, regardless. Stochh RSI is almost broken out into overbought on the weekly here. The last time was even at this level was up here at the top here, in which case it was rejected and sent down. So every time we're kind of getting up here, we're kind of hitting a top and coming back. The daily, daily has been forever. Basically, most of February we've been overbought here with the Stochh RSI, and RSI is just about now ready to hit that overbought. So yeah, again, I'm thinking kind of along that same way. To me, it looks like it's this final extension, this final kind of push to have a likely reversal. So yeah, glad to see that you're kind of following in the same ideas that I've got. So that's always good. Let's go and look at Bitcoin, man. So I know, a lot of people that are joining in here are really, into crypto. And so one thing I've talked about coming off the bottom here is that we would look for 5 waves up toward this daily R1 pivot, and then a pullback to the daily pivot, and then a rally up. And generally that kind of gets you that 5 waves up. You'd look for 3 waves back and then go up. So, but here's the thing. I think right now it's kind of this idea for me anyway. I'm looking at 2 possibilities here. I'm looking at the possibility that maybe wave 1 is done, but if it is, usually your pivot, your pullback should be around the 50%. And that's a bit lower here. That gets us a bit below there. So when I'm looking at this, what I'm kind of thinking in this area, let me see here, is to get potentially that this is only maybe 1 and 2 of 5. So instead of 5 of 1 ending right here, this ends up becoming 1 and 2, and we get this overextension. And so this overextension would give us a target up here around 30,800, which, from down here at the bottom, I've been talking, on my streams here and mentioning the possibility that if we get this kind of this bullish impulsive breakout above this structural 25 215 kind of area here, if we can get an impulsive breakout there, then we were looking at 29 30,000 area most likely. And even from there, potentially even, if we're breaking out above kind of this 32.5 area, we could potentially see it rallying up to, maybe 40,000. So I'm kind of open for interpretations at the moment here. I think right now we're looking for kind of a pullback. If this is correct right here, then we're looking, right now we've almost hit the 61.8 retracement, which is toward the bottom of this orange range here, which is a 23.6 retracement of this entire run. So I'm thinking if we can get a rally up and out through here, I think that kind of keeps us in this alternate red count, which gets us up around that 30 and a half or 31,000 area. And the thing I like about this count, let me talk to you guys real quick here. The thing I like about this count is if we were to get this, right? And let's say we get this one up here and we get the pullback. So now we've got a 50% pullback to the high volume node right here where all this support is, right? So you kind of get this move then where you have a 1, you get a 2 back down here, right? But from that point, all of a sudden, watch where this ends up now. So if we do this and we can get at least this right here, and so then that would be a pullback from around almost 31,000 down to around 23,000, guys. So it would be a big pullback, right? That would then get minimum expected wave 3 up here at around 47, basically 48,000, which would then give us a wave 5 at about 54,000, almost 54,000. But here's what I think would happen in this case. I think we would probably get a rally up to the secondary wave 3 target. So we go something like this. We go 1, 2, and then we'd get 3 up here, right? So instead of the 1618, 3 would be the 2.0. It's the secondary target we usually look for. Now, what becomes interesting with that is at that point, we get that little bit of an overextension there. And so wave 4 then pulls back to around 42,000. And then that gives us then a wave 5 based on all that up here at around 65,400, 65,500, almost right around there. Now, the thing I like about this is usually when we're counting Elliott wave, the first 5 waves up, the first sub-wave of the next wave of the larger grid going up usually terminates around the swing high. So this would get us, basically right here where we had the first touch and then we had like little breaks out here. So to me, this would be like a really a perfect kind of move to it. And so what happens here is you're going to get a lot of people who are going to get sold into right here. This is where the market gets kind of crazy. And they're finally waiting. They've waited all this time. They've been confused. They haven't bought in. They're trying to buy the breakout, get ahead of it, and then they all get caught here as it then pulls back before it breaks out again. So when I'm looking at that, that's kind of what I'm. As long as we're continuing to hold support here, I think that's kind of what we're looking at. But I know again, you look at it a little bit different way. Or what are you kind of seeing on your side there?
Yeah. Let me start out on the daily because that's what you started out on. What I've done is definitely. I mean, I've been long. I'm actually 30% long still at this level, which is actually underneath the shallow fib, which I started my threshold right here. We went into the bull zone on the daily and worked our way up, and we've hit the high. The shallow fib would be the buy area for a continuation to the upside, which is pretty close to the 233 EMA. The shallow fibs right now is just above 22,156. So this is an area that would be the buying interest area for me, as long as we are holding within the bull zone, and we're still well within the bull zone. I still think it can come down to that shallow fib, remain in the bull zone, and find that support and find that buying interest to push us to the upside. Some of the targets that are here, like the 100% hit, and then we're working our way down. And I mean, there's a bunch of trades in here that I've already done, but I'm still remaining at the 30% long at the moment. And when I say 30%, that's just my risk management type play. It's I trade in buckets. So I have capital for certain things, and the 30% is just, for instance, if you got 100 grand in BTC, then 30% of that is what you're actually trading. But then I have like multiple buckets. And then when you take them all into consideration, the overall exposure is probably like less than 2% overall portfolio. But that gets all kind of crazy. But right now I'm long at that point, working our way to the upside. My next area of target is going to be in this zone. I look at the 127 to 141 areas based on my system.
And what price levels are that?
27,867 to 29,2.
Okay.
Is that first level? Well, after we break this, of course. So in other words, if this support holds and we make new highs, that would be the next levels that I would be looking at. I would actually find a spot inside that zone, and usually I'll look back at some historical lows and highs. And this one right here kind of looks like a good spot within that zone to kind of consider to take profit.
What is that?
28 to 20.
28.
Yeah, it would be that area. Now, another thing that I look for, which, I mean, if this works out perfectly, it would be nice. You rally up, hit that, come back down to the new shallow fib, because if it went up to that level and I bring the fibs up to that level, the shallow fib would be at 23,994. It would come down to that area. I'd buy again. And then the next level would be 34,969. That would be that next level to the upside. Now, if we end up going up to, just say it doesn't get down here and it continues to rally to the upside, and I never really get a buy on the shallow fib, my next buy on what I would do to press my position would be 3 consecutive daily settles above the 141. Because what I found based on where I set my thresholds in these levels, 3 consecutive settles above the 141 brings a high probability of that 200% coming into play at 34.9. So if this does rally up and I don't get to buy any more on dips, I would add more and press the position I already have. Because right now I would, if it got up to the 28,220, I'd take 10% of this as profit, and then I would have 20% long. And then the next target, I take 10%. I always do 10% tranches. It's just simple for me, and it's just something that I've always done. And it just kind of keeps it easy. But those are the levels that I'm looking at for the daily. But when you flip over to the weekly, some of the areas I'm looking at, and based on a lot of timing studies and a lot of things I've done, I've been looking at 35K by April. That's the level I've been looking at based on on a lot of timing studies I've done. I know there's a lot on here. I don't have to go into everything, but I wanted to jump out to that next time frame. And if we break that, if we get up to that level that on the daily here, brings us up around close to that 35, which is that 200% level, which would push us to this area here at this trend line, in this area that I have marked. So I still think we have that move to the upside here, and then correct back, and then we would break this trend line to the upside. And the reason I like this is because there's a couple different areas on this chart. One is this red dotted trend line right here that we broke and then came back and retested. To me, that was a good sign for the weekly that we kind of structure are bullish now. And what I would do is I would just take that, just kind of roughing it in. Let me take the magnet off. Sometimes that gets to be a pain in the ass. Taking the lowest point of the trend line to the trend line itself. Actually, this one is a little bit further. So this is a technique I use all the time, is to give a minimum target. So take that, clone it, and then so you take that same rate of change that you see from the lowest point to the trend line itself, and then you got the break point of the trend line itself there. And you take that same rate of change, and given that that's a target based off of this break, it breaks this. So we could actually go all the way up to 52 on this run before we correct back. And then this trend line here would be, this 35K would become the support. And then we would go further from there. And then this trend line, that the low that we've seen so far up to this trend line here would be the next target, which would be this area up here, which brings 85.6 for me. So you got,
I like that.
so that's the stair stepping if it's going to work the way it should. But I like this pattern because this trend line break to me breaks this sometime in the future. I think it'll get there in April. It could be a little earlier. I'd like to see it earlier. That'd be nice. But that 35K is at April. And I thought maybe we would test that, come back down, and then break up. But we'll have to kind of keep an eye on it. But so that's what I'm looking at when it comes to breaking into the bull zone on the weekly. And the interesting thing here, this doesn't always happen, but it's always nice when it does. When we broke into the bull zone here and I set my thresholds, it was right when this trend line was breaking. And then we came back and retested. And then the buying interest that we saw off this trend line and working our way to the upside is a good sign for me. I like seeing the trend line break, the throwback to the line, and then the support bounce up toward some of these resistance levels. So when you're looking at it from this aspect, that's why I like to take what I'm looking at what your counts are, and when they're working together, that gives me a little bit more comfort to say, where these support and resistance levels are going forward, or basically entry and exit points going forward. So that's what I'm kind of looking at. It might not match exactly, but if you're looking at those extended waves that you're looking at, I like, ultimately 52 would be nice. A break to 35 and then off to 80 would be primo. That's what I would love to see that. But there might be something a little along the lines of we get up to that 35, then it kicks back, maybe consolidates a little bit, and then takes off later into the year. So that's what I'm looking at on the longer term basis.
What time were you looking at there in April? When were you looking at?
With the price level?
Yeah. The date.
The timing that I had put us right around April 17th.
Okay.
So basically mid-month.
Okay. Yeah.
And that comes from a lot of different things I'm looking at on timing and all that. But one thing I noticed when I was looking at the weekly, based on a lot of these timings and halvings and all that, when BTC made a low on the weekly here, it was 75 bars until it actually went to the halving itself. This one was 78, and this one was 72. So when you bring it out to the monthly here, where the halving is, and you put it out, our low on that monthly, where the low was established, is where the halving's at. And this is where that 35 come back down, hit up to the 48, maybe come back down. And then I don't have the wave counts in here. I was just putting this in as a guide. So don't look at this scale. But this is kind of the same kind of thing I'm looking at. The 61.8% level maybe comes down here, worked its way up, that kind of thing. So longer term, that's what I'm looking at based on timing stuff. So that's where I'm at on that.
Yeah, what I found interesting. The reason why I was asking that was because if I zoom out here to the weekly and I grab that trend line you were looking at, right? This one right here. And then we kind of look at the date in which you're looking at right around here. I mean, it kind of gives us this area right in here. And so again, the idea is that we would get 5 waves up from down here up to here, up toward the R1 pivot there on the weekly. Same thing we're kind of talking about on the monthly there.
Yep.
And that pullback gives you 50% down to the pivot. So usually this will get you like a 1 and a 2 as you do it. Even right here, it's just a bit below.
Yeah, what's that 50% level?
Right now, it's right around 25,300, right around there. It gets this. What I like about this is it gets this area right here. I always tell everybody, look left. Because here we are hitting this a little bit above this, which was just the support over here on May 9th, the week of May 9th of 2022. And then, of course, it was the swing high here on the week of August 15th of 2022. And then again, our current high. So this is a pretty technical level here. It's pretty, serious level. So my thought is, again, if we're breaking out through here, I can definitely see this move up into this mid to upper 30s to actually give us 5 waves up. So get some kind of maybe some kind of overextension going on in here to get us up there. And then we just kind of pull back down toward that, 25.3, 26.7 kind of area right around the weekly pivot. That gets us 1, that gets us 2 on that pullback. And then 3 of 3 is that big move through that resistance. And those are kind of usually the things that I'm looking for. I'm looking for those bigger, when you're getting through like a weekly pivot level or this kind of, if this is significant resistance here, if this is meaningful resistance, then what we can expect is when we break out, we should get, a nice volume spike, large candles on the breakout, and it should stay above it.
Yep.
So talking about, what we're talking about as far as timing goes, and you've got this kind of descending resistance here and everything. I mean, I like that. To me, that would be really, really bullish if we hit that. Again, the idea being that we would rally up into this box kind of around the R1 pivot on the weekly, which just gives us a pullback to the weekly pivot, and a rally off that. I mean, at that point, if you're getting some confirmation on the weekly on a support in this area on that weekly pivot, I mean, I think you just go long then, and you just look for a new all-time high if you just want to kind of buy and hold for a bit.
Yeah. For longer term hold, absolutely.
Yeah.
For longer term swing trade, for sure. And the nice thing is I really like that. I mean, right now that 25K area is what everyone's looking at, like especially on the weekly. You got the death cross that people were talking about, and don't get me started on that. But but one thing that's nice about that level right now, I have 25.2 is that we hit 25.288, which was a target based on my previous thresholds, which is also a previous high on a leg up. So if that breaks out and we actually get to that 35K that we're looking at, that 25.2 area is primo technical support level to when that comes back off the highs that we hopefully get to see at 35, and it works its way down. That's the back the truck up, buy a bunch of it, and wait for those all-time highs. That's the way I'm going to play it. That's the way I'll play it. But of course, it's got to happen. But right now, everything so far, based on the daily and the weekly going into bull zones, from a Fibonacci expectation, from what I look at, everything is hitting just right. So if that's happening, that is just golden. It makes me very comfortable in my positions to hold those longs that I'm holding at the moment. But we'll have to see what happens. But right now, everything's looking really well.
All right. So I guess one more question on Bitcoin here. What kind of level are you looking at to say? I mean, I know I think like me, you kind of believe that the bottom's likely in. So am I right on that?
I mean, in the beginning of January, I called the low and said that 35K in April. So hopefully it's still going.
All right. So let me ask you wrong, but I always talk to, the people that follow along. I always talk about, if you're trading, you've got validation, you've got invalidation levels, that's what keeps you profitable. That's what keeps you sane.
Yep. So it hasn't invalidated yet, put it that way.
Yeah. What kind of level are you looking at to consider that maybe that maybe we might potentially be going below November lows?
To make lower lows?
Yeah, but below these November lows. At what point here would you kind of consider that and go, yeah, probably? It doesn't mean it has to, but you'd start leaning that way potentially.
I would have to see. I mean, for me, the weekly RSI levels that I look at for my threshold theory would have to go into the bear zone for me. And right now, that would probably be around 18.1. Like if we get back below 18 or so, I think that's where it would start to break. Now, don't quote me on that because I don't have that number, but I think it's right around. I would think it's right around that 18.1, 18.2 area. It would have to get back below that, and that's I think would signal back bearish for me. And if it got down to that 18.2, then we're probably looking at like 12K or something goofy like that.
I agree completely there. I mentioned it a week or two back or whatever. Again, I reiterated that for me, we would have to have a significant pullback down into this area. So basically what you're saying there, down in that low 18s, getting to high 17s, this area here, because this is just all inefficient. This is just a quick move up. Yep. So, I mean, we could potentially see a pullback into this support here and then rally up. But I think if we're getting to this point, I'm like you. That's what I said is my kind of area that I'm looking at. If we get down there, I'd more seriously consider that maybe there's a bottom or a new lower low coming in 12, 14,000. And probably below 14. Yeah, probably closer to 12 now with the big move up. As a matter of fact, if I was to measure out from here, if we were to go from here, I've got potentially even down here at 9,500 which actually just happens to
it gets pretty
coincide with the
ugly
high
if it gets
volume
down
node.
It definitely gets pretty ugly when you start looking
Yeah,
into
yeah,
it.
but for me, I mean, you've got a lot of accounts. I know you've probably seen them on there online, a lot of these bigger accounts, and they're out there like, oh my God, we dropped below the support up here that was $200 away from the high, and that's the bearish signal. Now we're going down to 12,000 or 6,000 or whatever. And of course, I try to be more realistic like that and say, listen, guys, there's nothing happening here that absolutely says we should be thinking here. We've got a lot of work to do in this area before we do that. What do you think?
Yeah. No, yeah. I'm in complete agreement. I look at it as baby steps. I don't want to look too far ahead when you have like 3 or 4 major support levels to even get through before you even consider that.
Yeah.
So I'll just take one support level at a time, see how it reacts. So for me, as it comes down to a first support level, what's the volume look like? Is the momentum building? Look at different things. If the momentum's building as prices approaching that level, then maybe we start looking at that next support level, and then see how prices react in there. So I kind of take it in baby steps. I'm not going to say, well, we broke this little bit of support here on a minor near-term look, and the next thing you know, I'm calling 9K. Right. I'm not going to do that. I mean, unless there's like some major historical stuff going on and some analysis that shows that. Just like I did a lot of analysis looking at back in January to see a 35K possibility, but everything I'm looking at on my analysis doesn't show anything reversing back to 9K yet by any means. I can't even find anything. Doing more and more analysis, I don't see it happening just yet. Can it happen? Absolutely. Sure. It's a freaking market, but right now there's no signs or no internal indications, no psychology changes for me that show any of that type of movement just yet. Now, can it go back down to 18? Probably, and it could. But then again, there's going to be some major fill the truck up at 18K for all the people that didn't get it the first time.
Right. Yeah, exactly. Yep. How long did you say you can hang around today?
No, I'm good for 1:30 my time, which is I got another 40 minutes. I'm good.
Okay, great. Let me see here. So I've got a question here from you. Let's see here. Eric Quinn's asking, says, I know I've asked Chris this already, so I won't be too annoying with this question, but I'd like to hear Fibo's perspective on where we are at in the grand super cycle top in stocks and cryptos. Is that something that you kind of pay attention to there?
I have, but I haven't looked at it recently. The last thing that I had was, let me see if I can find something real quick. Okay. But a lot of different, there was a lot of different super cycle stuff that all came together. I think I had like 4 or 5 different wave 5s coming together. So there was that possibility. I haven't looked at it in like a month, so I'm going by memory here, but let me see if I got my chart still that I had on that.
Yeah, you're a certified Elliott Wave technician, aren't you?
Yeah, I mean, I took the exams through Elliott Wave, the Elliott Wave International. If that's what you're asking.
So just in case anybody's wondering, what kind of creds he has here, well, there you go. That thing I'm still trying to find time to do to finish my exams.
Yeah, but it's. I mean, I took these like 5 to 8 years ago. I can't even remember, but like, but I use Elliott Wave for more of I don't trade off of it. Like, I mean, you don't really trade off of it either. Right. I mean, you kind of do, but you don't. I use it for direction and verifiers for my other stuff.
Exactly. Yeah, the way I teach Elliott Wave is that the most important thing about Elliott Wave is just understanding that it gives you a directional bias. What way is the trend moving, and that way you get in on the trend. You don't have to know if the count is exactly correct or which you may have 3 different counts you're looking at. They're all higher. Yeah. Well, all you have to know is they're all higher. So get in and write it up and then figure it out as you're going along. Yeah.
I mean, if I do 2 or 3 different alternate counts and they're all bullish, then there's your direction.
Exactly.
I mean, this isn't the best chart, and I haven't updated it in a while. But I was looking at a lot of different fib stuff on this, just all the way back, I mean, way back when, because it's the monthly. Mm-hmm. I was looking at some of these fib levels, like when it broke the 100%, the 200% here was a level, and I was looking at a bunch of different things. This is a messy chart, so don't. This is about the only one I could think of that I haven't updated in a long time. But I was looking at this area of consolidation, then it popped up into this another. This
What
is like
is
your
that?
way.
Okay, the mid 70s there.
Yeah. So
Yeah.
so basically, this large wave 3, and then you went into this consolidation of some sort of wave 4, and then we had another wave 3 into another wave 4 here, and then I had everything kind of come into fruition up here, because what I was looking at was the extensions, the 0 to the 100%. The 200% was actually my target at 32,723, and of course it went up above it a few times. But to me, that was the kind of top out to where we have a 1, 2, 3, 4, 5 correction back down to the fourth wave of one lesser degree, that kind of stuff.
Yeah.
So I was looking at that as a possibility. That brings it all the way back down to like 20K.
Right.
Not to say that it can't, but to me, that super cycle possibility is there. And of course, that count will be negated if it makes new highs. But right now, I'm looking at a 1-2 with a large wave 3 possibility coming up. Basically, sometime maybe late this year could possibly be this wave 3 to the downside, and then a wave 4, and then a wave 5. But I don't know if it'll. I haven't looked at it enough to get a little bit more in depth, but that's what I was kind of looking at on all these super cycles.
So let me ask you this then. If you're looking for that down, but you're looking for the dollar to continue lower and you're looking for Bitcoin to continue higher, how do you I'm sure everybody kind of wants to know, how do you interpret all that? Because, Bitcoin being a risk off asset, stocks being risk off, dollar rising would be risk on, but dollar falling be risk off. So how do you kind of put all that together?
Yeah, well, this is the kind of the controversial way of doing things, I guess, is I don't really look at the markets that way. I look at everything separately. I analyze every market as its own bubble. The reason it's a little bit more work intensive, but the way I approach things is I try to measure the psychology changes in the market, right? So what I'm doing is I look at that specific market. So if I'm looking at Bitcoin, that Bitcoin market to me is its own set of psychology. And I'm going to be looking at that market in and of itself. And I want to know how the psychology is working for that market only. Then I'm going to look at the Dow, and I'm going to look at that market separately to see its own psychology going on in that market. Now, of course, there's going to be your general correlations and inverse correlations that can happen in markets. And those are something to consider when you're looking at things. But the way I approach things, and I know it's a little different and a little bit more work intensive because I'm kind of old school, but I look at them as individual psychology buckets. So to me, psychology and Bitcoin could be one thing, while the Dow could be doing another, and while the dollar is doing another. Because to me, the dollar is its own animal. But yes, when you look at it in theory, if the dollar goes one direction, the other market should go the other, and those kind of things in theory. But to me, psychology is not always perfect because some markets, you don't know what market participants are doing in Bitcoin versus what's happening in the dollar at the moment. There could be something happening in the dollar from 3 other countries that are trying to do something, and it's getting slammed down. In the meantime, Bitcoin's doing its own thing. So to me, I like to look at them separately. It might not be the best route to do it, but it's worked for me for all these years. So I've kind of stuck with it. But I know there's a whole world out there with intermarket analysis and doing that. It's just not my cup of tea. So I really don't jump into really give good advice on spreads and those kind of things. It's not that I don't look at them. I don't really analyze them to figure out a good thing. So I know it's a shitty answer because I don't really have an answer for it, but I look at them individually because I want to know what's actually happening in that market, in that actual capital pool, and that psychology that's happening.
I happen to agree quite a bit with what you said there. I've been doing this for 5+ years, live streaming here, and along the way throughout that time, we always have people asking, well, why is dollar and the Bitcoin rallying at the same time or whatever? And and I try to give them an understanding that that what the dollar is doing, is oftentimes the kind of canary in the coal mine, right? So it kind of alerts us to what may be happening as far as risk goes. But just because it does something doesn't mean immediately you have the opposite effect elsewhere. So, Bitcoin and the dollar, or stocks and the dollar, can trend in the same direction over a period of time, just as more locally as opposed to the much larger time frame.
Yeah.
So, glad to hear you saying that.
Yeah, a lot of people don't like my answer because it's usually like I have no freaking clue of why. But the indicators that I set up and the plan that I have in place and the strategy that I have in place will tell me if that matters or not. That's the way I kind of look at it. So
Yeah.
So to me, if Bitcoin and the dollar are going up at the same time, I don't really know the reason why, but the indicators are telling me that I should run with both of them at the same time. I could go out and look at the news and try to figure out why, but that I'll leave the news guys and the fundamental guys to let me know what's going on that way. But that's the way I approach things. I like to do my technical analysis in a vacuum as much as I possibly can.
Yeah.
Then I'll contact my fundamental guys that I trust and say, hey, what's going on over here? If they match up, great. If they don't, then at least it gives me something to kind of consider, maybe take a profit or something that maybe be happening in the fundamental world that the indicators aren't capturing yet, or all that. But really, I just kind of look to my indicators to let me know what news matters, what doesn't. But I guess that's really what technical analysis is, right?
Yeah,
Exactly.
exactly.
The market discounts everything, right?
Well, and I think we kind of hit upon a lot of the issue that a lot of times new traders have, which is they come in and they all of a sudden want to be fundamental analysts. But the problem with that is fundamental analysts requires a lot of education, a lot of work. You have to. There's so many moving parts. You have to, first of all, understand all the moving parts, and then understand it working together, and then understanding when you may not be seeing the full picture yet. And I always, from day one, teaching, traders how to trade and whatnot, I've always told them, listen, don't worry about the fundamental stuff. If that's something you want to do at some later point, do it at some later point. But right now, learn technical analysis, learn what's going on the chart. It's a heck of a lot easier to learn and understand than trying to do that fundamental side of it. And as we see all the time, you've got macroeconomists all the time. I mean, Paul Krugman, is a, award-winning economist. We don't necessarily like him a whole lot, but one of the famous things he said was the internet back in early 2000, when he thought it was going to go the way of the fax machine or whatever. Right. And, or whatever it was. And, here we are, 20 years later, and I can't imagine anybody born in the last, 20, 25 years that could imagine life really without the internet at this point, and so, I guess all that's just to say, listen, fundamental analysis is really, really difficult. And if you're doing it, I always take the position that if that's what you're basing on, most of the time, you're probably going to be wrong. And so if that's the case, why not try and find some place that's a lot easier to find those validation levels? Because at any point, what's going on with your fundamentals could be something that changes just because of where you are in terms of a cycle, of a specific cycle, and all of a sudden those things that usually happen this way would lead to something else. All of a sudden, don't do that this time around.
Yeah. This is the way I kind of look at things, and I try to be as simplistic as possible. To me, everything's a tool. So if you're a fundamental analyst, I'm not discounting that. That's a way of looking at the market.
Yeah.
But there's voids. There's things that econometric models can't capture when it comes to supply and demand of a certain asset or whatever you're looking at. Because what you're doing is you're trying to find an equilibrium price. So you're looking at it from an economic lens. So to me, the financial side is a financial lens. So you're looking at the market in a different way. And the void that fundamental models have is they can't capture momentum and trend and psychology changes in the near term, because they have to have supply and demand data that comes in, which could be lagged. And by the time they get the data or the changes, it's way too late and you've already had a 30% run. So the void for fundamental models is that they can't capture the near term trend and momentum. Flip that to the other side. Technical analysis can't determine what's going to happen 2 to 3 years down the line as well. I mean, there are longer term methods you could use, but when you're looking at it from maybe you want to hedge something out 2 or 3 years because you sell a product and you need to know what fundamentals are happening in that, that's a whole economic thing. So there's a void that technical analysis can't do, that fundamental analysis can do as a tool to help you on that. So that's the way I kind of look at things is I like technical analysis and price action to figure out near-term psychology. And then I'll look for the fundamentals to see if that long-term trend is going to remain, because if the fundamentals are going to be very strong going forward over the next 1-2 years, then it gives me comfort in the near term to say, all right, we're on a bull run. This should go for a while, unless there's some crazy ass thing that happens on the fundamental side. But usually if something's happening quickly on the fundamental side, the indicators will start showing it in the near term. And that's why I look to the indicators and the price action, because there's so much information you can grab just from price action when you start digging in. So that's the way I kind of look at it. So
I just want to pull up my my Dow chart here real quick. You know, you were talking about targets and whatnot, and so you know I'm kind of on the same wavelength with you there. You know, I was talking back here about the coming, you know, potential super cycle top. You know, the wave 3. Wave 2 being, wave 1 being 1929, wave 2 being the Great Depression, and then wave 3 being what we were coming up into as far as grand super cycle tops go. And again, looking at, you know, this was that, can I pull this back over here? This was that March 2020 kind of drop here, right? And so I've got that, of course, here as this, you know, expanded triangle here, inverse, whatever you want to call it, megaphone pattern kind of triangle going on here. And so if I measure this out, you know, again, my target was at 36,614 based on the height of wave 4, right? Mm-hmm. And so we got just above that here, right up to 36,952. So, you know, just under $300 above that target area. But now I'm looking at this going, okay, well, are we here? If I'm diving in here, this looks like a leading diagonal off that swing high. You know, again, you know, something I often talk about is the fact that, you know, what you were saying, which is fifth of a wave, fifth of a wave, fifth of a wave, grand super cycle top. So at those times, we usually look for some sort of blow off top because it's all that exuberance, all that, you know, again, I think I talked last time with the folks here about the roaring 20s and how that rallied up, you know, almost went vertical there the last few years to hit that, you know, that what we believe is wave 1 of the super cycle there, grand super cycle. And so we didn't kind of get that here, you know?
Yep.
I
agree.
What was that?
I agree. The blow off top is the one thing that, that has kind of left me a little bit more hesitant on some of the stuff. But then again, if it makes a new high, then I'm out. You know, like if I'm going to try to work this short to the downside, once it makes that new high, then I'm out. Then we're probably going to get that blow off top. But go ahead.
Yeah, that's what I'm kind of thinking here. And so, you know, the way I'm looking at this, it looks like we've got ABCs coming down here to give us a leading diagonal. We've got 3 up, and then we've got 1, 2, 3, 4, 5 with that low there. And then we broke up above that second wave. So to me, I think there's a good chance this is potentially an ABC here. Now, for me, the question then becomes, is this 1, 2 of this larger wave 5? In which case, maybe we rally for another couple of years, another few years up, which if we were to think of markets together, that would kind of align with the idea of the next bull run with Bitcoin. Or is this maybe some sort of a 1, 2, 3, 4, and we're getting a 5th wave of 5? And of course, if this is 4 here, you know, that would get us this potential target up here right around that 42,000 area on the Dow. But, you know, those are like the big kind of 2 bullish possibilities I'm looking at right now. But as I tried to explain, as I've been trying to explain, we could actually go sideways here for the next year. I mean, 3 down.
Yeah, very easily. Yeah.
Yeah. I mean, especially if this is 3 and this is 4 here, I mean, this could turn out to be a triangle. You know, it could turn into a flat before we head up, you know, and either way, I mean, it's still doing that. Other possibilities, ABC down could be a W. ABC up could be an X. Get down, ABC could be a Y, you know. I mean, heck, I guess we could probably even look at it as this could be ABC of one. I mean, this could be 5 and done. It's right there at that target. This could just be the start of a leading diagonal here. So ABC of 1, we get 2, and then we get ABC down as 3, and then 4. So, for me personally, what I'm looking at bigger, longer term here is, do we get the breakout? Or if not, do we get the breakdown? If we get the breakdown, at that point, I say, okay, maybe it's a WXY, but then again, maybe it's a 1, 2, and 3. So it's going to be determined by how hard do we break down here. And that's what you were saying. Yeah, you were talking about that wave 3 coming down, a big move down, which is what we should expect.
Yeah, and like you said, all these alternate counts, there's so much going on in this area right now. It's really hard to pinpoint what is going to happen because there's too much going on. And that's why I'm kind of leaning toward 2 scenarios. I'm just going to play it. Large wave 3 to the downside for later into this year. Mm-hmm. Or if it breaks a previous high, then I'm out and then we're off on a long run. With all the different scenarios I had, those are the best ways for me to look at it at the moment. But I'm not really trading the Dow. I'm just looking at it for direction for other things. But yeah, it's just tough. I got a little bit different. I got a couple counts that are pretty close to yours that you're looking at. But generally it's the same because you get these alternate counts that you got 2 that are going one way, you got 2 are going the other way. And to me, that's a take a back seat and don't really do anything at the moment and try to get a little bit more near-term stuff, figure out direction on supply and demand or support and resistance breaks a little bit more near-term.
Yeah, and I think this is the difficult thing, especially for people that maybe just started trading, in the last year or two. It's this idea of reality, guys, is that we've got a potential range developing here. We've had almost a year of movement, of overlapping movement down. We've rallied up above the EQ of this range, right? We're using it as support at the moment. But realistically, I mean, unless you're day trading, shorter time frames there, realistically, what we're talking about is either it breaks out above the top there or it breaks down below the swing low here. And
really, that's what I would do too. I would not do anything until it does one or the other.
Yeah.
Because we could be sideways, like you said, for the whole entire year in this range.
Yeah, exactly.
Whipsawed back and forth in the same range.
Yeah, I mean, again, could be, 3 down here. I mean, like I said, if this is not 1, if this is 3 of 5, you can get an A down here, you get a B up, a C, a D, an E. And then you kind of, get that move on up. But that ends up being, throughout the year, could take the year to do it. Or again, ABC down, ABC up, get you the start of a flat, and then 5 back down, get you your flat finished. And that ends wave 4 or even wave 2 in either case. Yeah. And then you rally back up. But in either case, guys, you got to understand this could really last potentially this year. We often
it could wrap all around your the EQ level that you have right there.
Yeah,
it could average that for like the whole year. Just kind of
exactly. Yep. And so people, new traders, they pick up these things. When everybody's bullish, I need to be bearish. When everybody's bearish, I need to be bullish. And these are easy things to say, but they don't really understand what does that mean. How do you really figure that out? Other things people talk about often are this idea that what was I going to say here? I just lost my train of thought. Sorry about that, guys. But what I'm trying to get a point across, though, is that new traders, when you come in, you often, pick up these sayings which sound pretty easy, but in retrospect aren't as easy to do. And so you have to be really careful when you do that. Again, there's that quote, buy the blood in the streets, even if it's your blood. When your taxi cab driver or your shoe shine boy is giving you tips on the market, then that's probably the top of the market. These are great minds in trading, investing, guys, over the last 100 plus years that are kind of telling you these things. But until you've been in the market a bit and really understand what that means, you're going to make a lot of mistakes along the way. Again, especially with social media, you've got curated feeds which tell you what the AI thinks you want to see, not necessarily the way things are. They could send you a whole bunch of bearish posts, and you think, oh my God, everybody's bearish. but in reality, everybody's not bearish, right? So, I mean, it's a tough thing here, guys. It's a tough thing. So, yes, I've got my ideas of what may be going on and why. Again, a lot of mine is that idea that we didn't break out, we didn't get that blow off top kind of thing. And then potentially we've got what comes down to 3 waves down and we've broken out. So, I mean, for me, those are kind of my big kind of indicators that maybe we might have further go up. But guys, at the end of the day, unless we're breaking out higher, we could still just continue lower. And whether that's a WXY or whether that's just a flat correction finishing out, or whether that's, a leading diagonal here, and this is just 1 and 2, and you'll get 3 coming down, there's no way to know from what's going on right now what it is. So if you're having trouble figuring out, you're just coming in and you're like, oh my God, do I invest? Where do I invest? Well, guys, if you're coming in right now asking about investing, again, pay attention. You are in the mid-range from the swing high, from the all-time high to the swing low. And when you're mid-range, the best thing is not to do anything. It's to wait until something happens. Something moves out. You're looking to either potentially sell rejection or buy support. Or if you get the breakdown, maybe you end up, selling the breakdown or a breakout. You buy that breakout. But trying to do something in here in a bigger picture is just not going to give you a whole lot of anything that you want to really deal with. So,
yeah, and that's why I jump back to the 4-hour and the daily on the S&P or the NASDAQ and just trade that until something really starts to trend.
Exactly. Yeah, get that trade in there.
At least that's the way I do it.
What was that?
At least that's the way I approach it.
Yeah. I mean, and that's the great thing about being a trader. A trader means that you can do something today, and you don't have to have a bias, an overall bias of where the market's going long term, guys. You just need to look at what's the local trend, and is there volatility, which equates into movement. If you can do that, you can trade all day, up and down all day long. If you're in the U.S. and it's difficult to short cryptos, which we know it is, there's barely any place you can really do it. And same thing with stocks. If you get in stocks, you have to be approved for a margin account, and then you have to follow the rules there. So what do? Well, you either stick with futures as far as legacy markets go, right? Makes it easy to short and easy to long, or my favorite market, which is FX. FX it's just as easy to short as it is to long. You shouldn't have an overall multi-decade bias or anything in grand scheme of things. Again, when you're looking at stocks, generally you're looking right and up, right? The stock market continues to rally. You have pullbacks along the way, but overall continues to rally, right? Most of the time, your currencies are range bound, whether that's a few decades or not, they're range bound. So it kind of helps take out some of the emotional side of that. Do you got any charts you're looking at right now, man? Anything special?
In legacy markets or just
in any market, man?
Really I've taken a lot of profit on some things lately. The only things that, like in crypto, I'm looking at is Bitcoin, Ethereum. That's really about it. I had some Litecoin, but I got out of that. The only other thing is S&P 500 mini, the dollar, and gold. Those are the only ones I'm in at the moment.
Well, why don't you show us your gold, man? Show us your gold chart if you don't mind.
Yep, no, I can pull that one up. Right here. Actually, I just hit my first target buy on the short side, because the went into the bear zone here, set my fibs, and a lot of people ask, well, why did you set the fib over here? It's based on once it goes into the bear zone, I set this vertical line, and I think I'm like one of the only ones that look at this vertically instead of horizontally. But the going up this way, and then what I do is I look at the ADX, and then when the red negative directional index crosses to the upside right here, and the green positive goes down, the first positive change on the ADX, whatever period you're looking at, is a 4-hour. So after that crossed over right there, the ADX actually increased right there, and that's where I start my fib. So, So the threshold's right here that signaled bear, but the threshold itself starts there. So when I start looking at this, the previous shallow fib was right here. So you wouldn't have went short until this area right in here.
What area is that?
About 1880, 1890. Okay. And then we just went sideways for a while, and then it started on the bear trend to the downside. So my target buy just hit today at 1816. We're at 1817 right now. So that's that first buy that typically the way I would approach this is if I was short, that's going to be that first spot that I would actually just take the profit.
Okay.
In this case, I actually didn't go short at that time because I was doing some other things and I missed it. So I actually was looking at, yeah. And what I did was I was looking at this as that first target buy possibility to go long, which I did. I had the order in there, and I'm sure it filled because it went back below the level. But that would be my first long. And since we're in the bear zone, this shallow fib up here is the target for trading within the bear zone. But the one thing the reason I bought here and not waited for the extension, because typically I would wait for the extension on this instead of getting the target buy. But what I like about it so far is we're getting a little bit of a divergence here. I got the magnet on again. Basically the low here made another low, a little bit lower low, and then on the RSI here, well, actually, it's not as close as I thought. No. It's a little bit. I bought there. The next level to buy for me is at 1750. Is the bottom of this zone, which comes in at a threshold level back here. So I will actually add to my position on here if it doesn't come up and get me out on this point. So in other words, if I'm long here within the bear zone, I'll sell out at the shallow fib and then buy lower.
And what's that shallow fib?
1864.
Oh, okay.
And so right now I just went long on my target buy because I've been waiting a while for it to get down there. Finally got down there, so I went long there. But I only do 10% tranches. I'll buy another 10% down here if it gets into this extension. So what I would think would be is if the RSI would get into oversold conditions, I would average myself out in the bear zone and to go from there. If it gets down to that 1750 and we get 3 consecutive 4-hour candles underneath that, that's going to be my stop to get out. I'll take the loss. And then I'll look down at 1650 or even lower on some of these other targets. But right now, long there, I'll sell it back out at 1864, buy again at 1750, and hopefully it goes back up from there. Or we go up from here, hits the shallow fib, I sell out, and then it goes bull, which I'll be happy. That'd be fine. Then I'll just reestablish my long position and go into the new bull zone. But right now it's bear zone, not a lot going on, but I did kind of catch the falling knife there, I guess. At 1816. So I'm up $1.70 at the moment.
All right. Well, I mean, yeah, I like your levels there. Let me pull mine on here real quick.
Yeah. I haven't seen your gold chart in a while, so it'd be interesting to see.
Yeah. So I've got this. Well, I was looking at potentially the top out. This is what I've been looking at for a while, right? The idea that maybe we had like a 1-2 and we're coming down here.
What time frame?
What was that?
What time frame you in here?
This is the 12-hour.
12-hour. Okay. I couldn't see it on chart. All right.
So I mean, I've been the guy talking about, potentially heading back down toward, maybe even $1,000, $800, somewhere around there as some large flat correction off the, that started back in, 2012, 2011, that swing high, that all-time high up there. But the degree of rally here has me potentially looking at maybe the other thought was this is a 3 up at the top. This is a 4 down here as a flat. And then this is wave 1 of, and then wave 2 is the pullback now, heading up in a wave 5. So, kind of like what we're looking at there with the, with the Dow or something where you're kind of like, well, it's in this range. Is it, or isn't it? Is it topped out and heading lower, or does it have a little bit further up to go or a bit more to go? And I think I'm kind of at that with gold. So right now, if I'm looking at this rally off the swing low, you mentioned that 1750 area. That's pretty close to the 61.8 retracement here of this rally up. And so for me, I'm kind of looking at the idea, okay, well, we've got an initial target here at the 50. That's around 1796 or so. That gets us right here in this range, this range right here. It gets us right around the EQ of that, which is also, as you can see here, that large high volume node, right?
Yep.
We come on in here, put this information in. This is kind of where we're at. And so the middle of that high volume node is that, 1800 area around that. But again, the 61.8 gets you down there around that secondary area you're looking at if it continues falling down there. So there is confluence in, I think, what we're seeing right there.
Yeah, you said you said 1790 area was the. You said 1790 for something.
1796.
Yeah,
is the 50% retracement.
Yeah. So to me, on my stuff, on the threshold level at 1816, which was the buy today, and the next buy will be at 1750. I don't mind buying those two levels because, like, if I'm wrong on this target buy, I don't mind buying at 1750 because that's going to give me that average that I want, which is going to be marked right about that area.
Right.
So I'll be happy to have that average around that 1790, or maybe a little bit lower or a little bit higher. It just depends on what happens. But I like having that. I like having the confluence between my threshold level is 1816 and 1750, based on where I set my fibs, and then what you're looking at, that midpoint, I like. So to me, that gives me confidence to say I'd like to average right around that point if I get those two buys in. So yeah, that actually works out pretty well.
Yeah, I mean,
and the weird thing is like completely different ways of looking at things. Like I'm not even looking at it like that at all, and it's coming out pretty close on the counts, which is great. That's what
exactly. And so, like I tell everybody, it's not that everybody's out here and everybody wants to jump from system to system, but at the end of the day, they're all, if you sit there and you study them and you do them and you practice them correctly and you do them and you get used to them, become good at them, they all generally take you to the same places.
Yeah, they should. Yes.
Yeah. Do what?
They should. The confluence should be there for sure.
Yeah, exactly. And, so, I mean, I keep, flashing back to 2017 in crypto, where it was like, especially in the last quarter, it was like every week was, crypto Twitter would do something different. One week it was Wyckoff. Oh, it didn't work. Next week is Elliott Wave. Hey, I haven't really learned it. I'm half-assing it here a day and a half, but it doesn't work. Next week, ICP. Next week, and everybody was always jumping, and nobody was actually taking the time to sit in there and kind of learn what they were doing and practice it until it became good at. Again, people think that just because they can buy into a market and jump in there and trade, that all of a sudden they know what they're doing. But, we wouldn't go out there and say, okay, I want to go join a professional football team. I expect to get in there even though I've never really played football, or I want to be a concert pianist even though I just bought a piano last week, But for some reason, people seem to think that with trading, that they can kind of just jump in there and do it, and there's no worry about it either way, right?
Yep, it's definitely just like anything else, practice and experience.
Yeah, exactly. I think, honestly, I think we're probably, for me, I like your levels there because I think we're pretty close to it. You can see the daily's about to dip into oversold on RSI. Stochastic RSI's bottomed out there. We're right around the weekly pivot. We've got triangle support here. We usually triangle support, works as support, and usually get a rally up off there. Even the weekly Stochastic RSI is almost reset down into oversold right now. So, I mean, again, it's that high volume node right there, mid-range of this range. I think there's a lot of reason to think we're probably pretty close to a reversal point on here, which would add, again, more support for the idea that maybe this is 3 and 4, and then we're up 1, 2, heading up higher from that.
Yep. No, I like it.
Yeah. So there goes. Hey, listen, anybody got any questions for Fiboswanny over here? You guys have been quiet there. I'm not sure if we lost the ability for people to.
I don't have the setup to where I can see the chat, so I'm.
Yeah, I'll pull up any question if we got it here. Yeah, see if anybody's there. I see LXT joined.
So I'm not ignoring people. I just can't see it.
Right. Exactly. Let me see here. Who's here? LXT is here. Mark Chenard's here. Deadly123. What's going on, guys? ARM's here. Melissa S. checking in there. JC. Let me see. Who was that? JCC Solo. Solo says information is great. Love it. Cool. Mark Chenard says the chat horde was speechless, which is probably a good thing. I mean, it means, hey, you're giving them information that you're chewing on, which is great. Chris S is here. Good to see you. Nevlusian checking in as well. Says, let's see, what's that? Nevlusian saying, still must say I'm fairly happy with the results of the LMT program. At least I progressed more than the last 2 to 3 years by far. And we're just, what, a month and a half into that, 2 months? So, yeah. By the way, guys, the LMT program is an evergreen program you can join. And you're not going to miss out on anything. And you get access to everything we've already done. And, it runs for a year. So there's a lot in there. Don't think like, oh, my God, you didn't get in yet, so you can't get in, right, Michael? give me the eyes there, the money. Okay, well, I think
no questions. No questions. Come on.
I know, right? Oh, wait, wait.
I'm kidding.
Ellie says, "Can you teach your system? I like your charts." Yeah. So actually, Fibo has a group that he runs now under with TWC. We're going to have you guys the ability to get involved with that if you'd like here. I think I'll probably have it up this weekend. So if you want to come over to howtotradetowin.com, or I think TexasWestCapital.com will be up and running this weekend, and you can get in through there. So if you want to join in with us, or you want to join in with Fibo specifically, you'll be able to do that, guys. And he teaches his system in there with his group as well.
Yeah, and on that note, if you go out to where I have my Patreon at the moment, that is actually closed. I'm actually transitioning over with Christopher, so I'm in that limbo land. So you can't get into the Patreon. So once the link's up, we'll start from there. So just hold tight, and it'll be up pretty soon.
Yeah.
He's getting a new website, so I know how that is sometimes, and it takes a little while to get things going, and I get all that. So
moving to the new back end.
If you go to my Patreon, you're not gonna be able to get in. So you have to wait until the new link's up. So,
but we'll get that up there for you guys if you're interested in that, and that way you can check that out. Cool. Diego says that was interesting, particularly the level where you start your fibs. Again, guys, I keep telling you, those of you that have been with us for years and years and years, here at TWC, my big goal is not to teach you, listen, you have to learn this system because it's better than anything else. My thing is to get you to understand price action, to understand the psychology of markets, how things are moving, because from that, you can then come up with your own idea. Fibo's been doing this a long time, like I have. His system is something he's devised after learning that and learning other systems. And he puts together, and as you can see, it works really well for him. So I just don't want you guys to get, upset if you don't figure it out the first month, the first year, the first 3 years even. I myself, took me 4 or 5 years before I really got serious about learning and being open in my mind enough to actually accept new information so that I could learn. And, it is what it is. We all kind of learn at different rates, guys, but you can learn it. Frank says, we'll have to watch this again, maybe 3 times. I like that. Anyway, okay, guys. Well, I'm going to get out of here, and I know Fibo's got like a real job and stuff to go, right?
Yeah, that's where I'm going. This is kind of my lunch hour at the moment because I got a lot of.
So you guys have to let us know if you think this is something you guys want us to do more regularly. I think Fibo's probably pretty open to that. I know I am as well. And Fibo and I will be getting together and doing some one-offs for you guys as this year progresses on here. We're going to try and put things together for you guys for you guys to help you out and to get you some information and whatnot. So real quick here, Michael just wants to know real quick. He says, thoughts on synthetic derivative platforms, no order books, no slippage.
Thoughts on synthetic derivative platforms. Wow.
Nothing at the moment.
No, I'll have to think about that. That's a good question.
Yeah. I'm going to have
What do you think about it?
I don't have a position at the moment on it. That's something I will have to think about as well.
Yeah, I haven't really gave that any thought. That's interesting. No order books, no slippage. Is this just like me calling Chris up and say, "Hey, I'll sell you a Bitcoin if you want to give it to me"? Is it over the counter type stuff? I'm trying to figure out what that
Yeah, we'll have
means.
to figure out exactly what you're referring to there, Michael.
Yeah.
See, sometimes these guys are further up on the new stuff coming out than what I am.
Yeah, I haven't. I'll have to look into that. That would be interesting.
You guys are going to find out when you've been trading for, years and decades or whatever, you kind of fall into this thing of what you're comfortable with, what you're used to, because that's your bread and butter. That's what you do. And a lot of times, you don't immediately catch up with everything that's brand new. So, yeah.
No, I'm all for decentralized exchanges, of course.
Yeah.
But the synthetic thing kind of threw me off. I have to look into that.
To check that out. All right, guys. Well, I appreciate having you on there, Fibo.
Yep.
Like I said, guys, we'll get the links up there probably sometime this weekend. So you can check us out there at howtotradetowin.com or potentially even texaswestcapital.com this weekend. Michael's saying check out VELA or GMX. So there's that there. Man, you know what? At the end of the day, guys, and I'm not sure Fibbo will agree, the only thing you control is how much you lose. It really is. Risk management is most important thing you're going to do as a trader day in and day out, because again, nothing is 100%. You're going to lose money along the way. So the idea is to be smart about what kind of money you're losing and how you're losing it. So that way it doesn't set you so far back. Because remember, even with proper risk management, you're still losing money. You still have to make up the money you lost before you can be profitable, right? So other than that, I would say look for higher confidence trade setups, guys. Don't just enter just because there's a chance. Look for some sort of confluence, some sort of maybe divergence or, support levels that you're finding a support or you're breaking out through, or, resistance levels and stuff like that. But you don't have to enter a trade just because there's a chance it may work out, guys. Okay. All right. Well, that's it. Discord, I'll see you guys over there in a bit. LMT members, we've got in 1 hour, we'll have our Zoom meeting. And we'll talk about things with that as we usually do the weekly. But everybody else, we'd love to have you all joining us. But if not, again, we will see you guys on Tuesday at 11 a.m. Central Standard Time. Hope to see you guys there. I hope you guys have an amazing weekend. Trade safe. Take care, all right? All right, now this closing off I think is going to be weird. It's probably just going to close off straight. Thanks, Phil. Appreciate you, buddy.
All right, you bet. Take care, Christopher.
Right. Take care, everybody.
All right.